In 2015, India's economy was booming at $2.1 trillion. Everyone was buying smartphones. And with Jio's dirt cheap internet, 16 million people went digital. Indians were suddenly online, ambitious, and ready to grow their money. And yet, investing in the stock market still felt like filing taxes in a government office in the 1990s. In 2015, 2.5 crore Indians had a demat account. Today, that number is around 20 crores, thanks to one startup. A moat is what separates your startup from the rest. It's the part of your business that can't just be copied. Maybe it's a supply chain edge, a powerful content engine, or a founder's deep market insight. Great startups don't just build products, they build moats. And we're here to break them down. Welcome to What's Your Moat, where we unpack what makes India's most breakout brands hard to replicate. In 2016, 4 ex-Flipkart employees, Lalit Keshre, Harsh Jain, Neeraj Singh, and Ishan Bansal, launched Groww with the mission to make investing feel as simple as shopping online. They built a clean, mobile-first platform with 100% paperless onboarding and zero commission. Users could open an account and start investing within minutes. This frictionless experience opened the doors for millions of new investors, especially Gen Z and millennials in Tier 2 and Tier 3 cities. And they scaled fast. In just a few years, Groww became India's top investment platform, contributing to 40% of NSE's demat growth. The company leads the market share with more than 1.3 crore active users, growing at 5 lakh new users every month. And they made more than 4,000 crores in revenue in the financial year of 2025 alone. But Groww's success wasn't just about timing. It was about removing the fear of finance and building a useful product for first-time retail investors. In this episode of What's Your Moat, we break down the 3 key moats that made Groww India's most trusted investing platform. Moat number 1, simplified user interface. Before Groww came in, investing in India was a maze. To open a demat account, you had to fill physical forms, submit signatures, and wait days for activation. Major brokers like ICICI and HDFC required you to visit a branch or book a call with a sales agent, only to charge steep commissions and hidden fees. And most stockbroking apps were confusing and full of jargon. Groww completely changed this. They designed their app specifically for first-time retail investors. Groww stood out in the crowded investment space by turning something as complex as finance into an experience intuitive as online shopping. Point number 1, app design. Most investing platforms like Zerodha, Upstox, Angel One are designed for traders. With their candlestick charts and overwhelming dashboards, these apps are optimized for users who already know what they're doing. But most investors in India are still beginners. In fact, even today, only 8% of India's total population have demat accounts. Groww is designed for these new users. Their mobile-first design is built for clarity and ease. From the moment users open the app, they're greeted with clean icons, soft color palettes, and jargon-free actions like Start SIP, Invest Now, Track Growth, or Invest for Goals. The learning curve is almost zero as the interface uses everyday language and familiar flows that mimic how people shop online. It looks like a fintech app, but feels like a D2C brand. Second, easy onboarding process. India's digital infrastructure has seen a complete 180-degree shift in the last decade. The rise of smartphones, Jio's cheap data, Aadhaar adoption, and UPI penetration. All these factors have worked out in Groww's favor, making onboarding paperless and instant. Users can complete their eKYC, set up a demat account, and get access to everything in less than 24 hours. It just takes a few taps for users to make their first investment. It's that easy and frictionless. Third, education. Groww's UI was consciously designed to decentralize financial knowledge for beginners. Education is built into every step in the app with embedded explainers, calculators, and videos in multiple Indian languages, guiding users without overwhelming them. Through all of this, Groww gave a direction to the confused consumer. The beginner-first design removed the fear around finance. The app now has 1.5 crore users and is adding 3 to 5 lakh users every month. More than 60% of these users are from Tier 2 and Tier 3 cities with a growing base of women investors. Groww's biggest moat was built through the insight of simplicity. Moat number 2, focus on mutual funds. India is in the middle of a retail investing revolution, but it's not happening through fancy day trading. It's happening through 500 rupee monthly SIPs. Indians used to prefer traditional instruments like savings accounts and fixed deposits. We were risk-averse and had limited access and lacked financial literacy. But over the past 2 decades, a mix of government reforms, digitization, and financial education has slowly changed that. Today, mutual funds, especially low and moderate risk categories like debt, liquid and hybrid funds are emerging as the go-to choice for Indians seeking stability with better returns. Groww built exactly on this insight. While other brokers pushed equities, Groww doubled down on direct mutual funds, offering zero commission, full transparency, and over 5,000 fund options compared to 2,000 on Zerodha. Most traditional mutual fund sellers like banks, brokers, and agents earn commissions from asset management companies for every investment they push. But Groww opted for a zero commission and direct mutual fund model. So there are zero annual maintenance charges and no hidden fees. Speaking of AMCs, Groww acquired Indiabulls AMC in 2023. This helped the platform launch and manage its own mutual fund products, which means better control over costs, returns, and innovation. Groww also recently acquired Fistem, a digital wealth management platform. This allows them to power mutual fund services for more than 15 Indian banks like Punjab National Bank and Bank of Maharashtra. No other platform matches this distribution yet, and the results speak for themselves. From the 66 lakh new SIPs recorded in October 2024, Groww alone accounted for 16 lakh of them. That's nearly 25% more than any other investing platform. Through 2024, Groww consistently added more than 1.5 lakh new SIPs each month, with an average monthly ticket size of 2,483 rupees. Look, ultimately, mutual fund investors are not looking to time the market. These are first-time investors under 35 years old who want returns beyond saving accounts and FDs, but without high complexity. So they usually invest for the long term, which means a sticky, high LTV user base that keeps growing quietly in the background. And that's a defensible moat. Moat number 3, full stack app. Most investing apps in India are one-dimensional. Zerodha is built for stock traders, Kuvera is built for mutual funds, InMoney leans on US stocks and tracking. Paytm dabbles in everything but struggles with depth. But the modern Indian investor doesn't want 5 different apps for 5 different asset classes. So Groww built a super app. Their app allows you to invest in multiple asset classes, including US equities, sovereign gold bonds, corporate FDs, government bonds, and so on. You can now even file taxes and take loans against your mutual funds, all in one single place. This full stack approach has 2 major advantages. First, user retention. Switching apps or platforms is a hassle, so when everything's on one app, users have no reason to leave. The financial life is already set up. SIPs, taxes, portfolio tracking, loans. So even if they're curious about a new platform, the pain of moving all of their data and automations to another creates customer stickiness and hence customer loyalty. Second, higher average revenue per user. As users aren't limited to just one product, Groww naturally cross-sell themselves. Someone who came in just for mutual funds is now trading stocks, investing in gold, or taking a loan, all generating different revenue streams for Groww. And the more products a user tries, the more money each user brings in without Groww needing to spend any more on marketing. Compare this with competitors like Zerodha and Upstox. In Zerodha, you need Kite for stocks, Coin for mutual funds, Console for portfolio reports, and Varsity for education. Upstox is better integrated, but still lacks global investing, tax tools, or advanced wealth services. Groww is the only player that brings everything together under one roof. And being a full-stack ecosystem for the next generation of Indian retail investors, now that's a moat. Let's summarize. What makes Groww so hard to copy? Number 1, the beginner-friendly user interface that makes investing as easy as shopping online. Number 2, the focus on mutual fund offerings to leverage the SIP penetration in India. And number 3, the full stack app that enables user retention and cross-selling. But let's be real. Building a financial super app in India is not easy. Groww still faces some serious hurdles. Banks are digitizing, global fintechs are entering the Indian market, and new age Indian startups might just use AI to build a 10x better product. With these risks, will customer trust help Groww? Or will someone else grow faster?